The month of September has not been a kind month to gold as we open the month on the highs, and we've seen a 5% decline since, taking us down to the first settle below 1,500 since the first week of August. And at this point, gold prices, you've seen a real quick run up to those recent highs. Now we've seen a real quick push lower. Nothing has really changed in a macro sense. We've obviously got a lot of central bank meetings, a lot of Fed activity. We've got things going on between China and the U.S. in trade, some good, some mixed. Still things going on in Europe like Brexit that haven't been resolved, but obviously a big swing in price. We did hold trendline support in gold prices just below 1,500 on today's settle. However, we took in all of the sort of bullish wind out of the sails of gold, and right now I would say it's being towards more bearish. But with all the central bank meetings coming up next week, it's difficult to have only a technical perspective. I think you need to look at the fundamentals here a little bit. Mr. Powell could say something next week. There are several other global central bank meetings where things could change. We saw this week that Europe continues to add, a more dovish approach to their policy, and they will continue to be more easing than maybe previously thought a few months ago. And I think central bankers, the more they add and keep their hands in the cookie jar, obviously the thinner it's going to dilute the currencies, and the dollar is no different. So right now, gold prices, while they are 5% off those highs, it's not yet set in stone that we are going back down lower, much lower from where we stand right now, which is a hair below 1,500. If you look at the dollar, you would have thought with this decline in gold that we maybe saw a rapid rise in the dollar since early September. But no, the dollar's done the same thing. We've seen a massive decline. The dollar was very strong heading into the late part of August, early September, and has also fallen off. So the dollar right now is seeing a lot of weakness as it heads and prices what the Fed may do next week. And I think right now the gold and the dollar really kind of trading off the same expectations. Is that gold right now maybe seeing some speculators get in and out very quickly. We saw the CFTC positioning suggested that speculators were exiting their longs very fast, which is prompting gold prices to go lower. But the dollar going lower should help support gold prices, and it hasn't really done that yet. So right now, on a sort of that off track that we've talked about, when we see gold prices rise when the dollar rises, now we're seeing the same as they go down. They're going down together. So right now, the dollar obviously looking for maybe some more dovishness from the Fed, obviously a rate cut expected, and I think at this point the dollar will be much like many commodities out there, and it will wait and see what Mr. Powell has to say come next week for the Fed. And lastly, let's talk about the Fed. It's really been a Fed/trade move here for gold. Gold's been suffered for so long. It was under heavy pressure. Then things really took off this year, and really since March we've seen a really big move in gold to the upside. And there are some that speculate that we could see even more, that what we've seen in this pullback could just be not only a buying opportunity, but speculators looking to get out and wait to get in at better levels. And at this point, the China trade, we see headlines, we see some deals being put through, we don't see others. Obviously, the stock market thinks there's very positive optimism in what we're seeing, but I think that the gold buyers will be there when things maybe don't go as expected or maybe don't go as well as hoped. And as far as the Fed goes, they're expected to cut 25 basis points next week, but what will their forward guidance be? That's going to be the key here. What will the forward guidance be for the rest of the year? Because we've gotten some mixed signals from Mr. Powell and the Fed in the past, and now that we're likely going to get some other unclear messages that we're going to need to translate later on. But at this point, I think it's going to be about growth, domestic growth. It's going to be about inflation, and how is this global growth trade thing going to affect the Fed's outlook? And right now it's still very unclear how the Fed's going to deal with that. The market's still pricing in more rate cuts down the road, which means gold does have some upside based on what we know now. However, we're going to get some clarity next week, and that will be the driver of gold trade. So I think right now, even though we've seen a bearish momentous move below 1,500, which would typically say sellers are going to start coming out of the woodwork, I don't think we're going to see that. We're going to wait until the Fed comes in, gives us their rate cut, and then we get to hear from the Fed chair himself, Mr. Powell, as to what he expects. I think gold prices will move accordingly.